Hi everyone, hope you're all doing well today. I've got 6 updates for you guys, so it could be a little bit of a long video. Well, actually there's 7 updates, but I wanted to be a bit of a Pep Guardiola and do the 6. So yeah, we've actually got 7 updates on this video for you guys. It could be a long one. What seemed like a very quiet week to start with, Monday and Tuesday, there wasn't really much to talk about. We have kicked into life on Wednesday and Thursday. There's been a lot of moves, a lot of news stories, so I'll try and update you guys with some of them today. Hope you enjoyed the video. Hit the like button if you're not here, subscribe. Let's get started. Right, here we go. Let's go with the first one. Watches of Switzerland Group. They are having a fantastic day today. A stock that I'm up around about 60% on right now. It's a stock that I bought as a bit of a turnaround play, thinking this stock has just gone too low. I saw the stock price falling off massively, the highs of where it was back in January 2022, everyone out buying those luxury watches, and yeah, okay, there was a bit of a slowdown. People that maybe have bought watches a little bit in the future being pulled forward, a little bit of a boom in the watches, the luxury market, and yeah, there was a bit of a slowdown, the economic slowdown. But I just looked at the stock as it went lower and lower and lower, and I went, okay, we're getting a little bit too low now. You know, when we get to the prices that we were at before, even the CV boom, that was the indicator to me that, okay, this valuation is getting a little bit too low now. This could be a point where it's just sold off too much. And I like that with a turnaround play. I like it when you look at the stock and you go, yeah, they've had some issues, but should it be this low? Probably not. And this is what I called a turnaround play. And as you can see here, around 7 months ago, that's when I made a video saying that I have bought into Watches of Switzerland as a bit of a turnaround play, and hopefully we are a bit of a bottom from a financial point of view and it'll start rebounding. Now, obviously, that was actually met with a lot of negativity, I would say. Not many people, obviously, you know, the thing is when share prices are going down, a lot of people make the obvious call of going, no, it's a trash stock, it's just going down. That's just the momentum of the share price. You know, everybody was kind of calling it, but at least Andy Pickering was there saying, actually, this could be a good opportunity. Oh no, Andy P, he's had another shocker. Look at this one. Do you really believe that Watches of Switzerland Group are going to make an impression in the US by simply retailing someone else's watches? Oh dear me, Andy P. Yeah, that's another shocker to the list. I've not heard from him for the last kind of 2 months on the YouTube channel. In the comments section, I think we need to go see if he's okay. I think he's struggling at the moment with that Hims and Hers stock as well at the moment. Anyway, we're getting on to point of Watches of Switzerland. Yeah, they came out with an update. The half-year H1 financial 25 results, and I thought they were okay when they came out in the morning. I think I put on the Discord, I was like, I don't actually know how the market's going to react to it, and I'll show you the reasons why in a little bit, why I was a little bit unsure. So they went with the headlines of improved trading and good momentum into Q2, and they went with the full year guide. And when I first started reading that, I thought, okay, the market will maybe react positively to that because it's been so battered that a little bit of stability in here might go, actually, okay, we can start, you know, there's no profit warnings anymore. There might be a few buyers that come in and do the bottom dip in here. So they did say they did revenue growth of 4% in constant currency, and they said that there was US growth of 24%. Andy P, simply retailing other watches, it's not going very well for you there. And the UK market also turned positive as well, which has been not very good for them recently as well. Now, as we actually scroll down here, you can see the revenue growth here. But the adjusted EBITDA margin was actually down 10%, and if you actually look at the operating profit was down as well, 23%. The EPS I think was down as well. Oh, you can see it there. It's just I'm not highlighted it. Free cash flow was down. Net debt was up. So when I started going into numbers, obviously we've known about the debt. That's not anything new. But the balance sheet was deteriorating. The profitability wasn't looking great. And then you actually look at the numbers, and you know, luxury watches were actually down. Luxury jewelry was up 104%, but you also got to remember that the acquisition of Roberto Coin, which contributed 51 million of revenue for the period. So actually, when you start looking at the numbers and you go, actually, the balance sheet's a little bit worse now. The revenue, yeah, it looks good, but the only reason why it's good is because acquisitions are actually covering up the cracks a little bit. If we go back onto the revenue guide here, if it wasn't for the acquisition, the revenue would have actually been down this year. And you never want to be in that position where the acquisitions are actually covering a few of the cracks at the moment. Like the business wouldn't actually performing that well if it wasn't for these acquisitions. And I've been in businesses before where S4 Capital, where they're making these acquisitions and it actually covers up some of the gaps in the business, and then eventually they have to stop making these acquisitions. You can't keep going out and making these acquisitions, and eventually you're left with the actual core business and you go, actually it's not doing okay. So when I looked at the numbers here, I thought, okay, the headline numbers looked okay, but actually when you dig a little bit further in, the revenue growth is actually still not amazing, I would say. The EBITDA operating profit, EPS is down. And when you look at the guide for the full year, we're looking for profitability, adjusted EBITDA margins actually to do. I can't actually find the full year guide down here while I'm talking to you guys. Oh, it's here. So you're actually expecting the adjusted EBITDA margin to expand. So these numbers are actually worse than where they were at H1 last year, but yet we're expecting a little bit of an improvement from last year. And I'm thinking, there's a lot of weight on this back end of the year in H2. They've got to have a really strong H2 to hit the full year targets. And I was looking at the stock and I was thinking, the stock is now rallied up to 14 times earnings or 12 times earnings, and the balance sheet's a little bit worse. The acquisitions maybe hiding up a few situations here. They've got to have a really strong H2. I was looking at the stock rally today and I was like, if they do hit these numbers, it won't be too bad. The stock would go up, but I don't know if, for me now, I think that is the job done. Where I kind of release the money that I've made on this turnaround play. I'm up 60% on the position. Is it kind of time to kind of walk away from it now? Because without doubt the numbers are okay, they're improving from where they've been, but there's definitely still improvements that they need to make, and I don't know, I'm having a think on that one, but obviously I'll take it because 50% jump is nice to have, so I'll have a think on it anyway. Card Factory came back to life, so anyone that has been buying in that dip has been doing very well, and hopefully some of you have been buying in that dip. Personally, for me, I have been buying in that dip. A stock of Card Factory's numbers should not have got to 6 times forward earnings. It did. It was like a 7%, 6% dividend yield or something, 6.5% dividend yield. It was ridiculous. The drop was ridiculous. And same again, as soon as the drop happened, there wasn't many people out there saying they were buying. This always happens, even though we're in a bit of a more euphoria market now. It's amazing that as soon as the drop happens, how quick everyone always turns negative on it. It was really hard to find someone that was positive on Card Factory when that stock happened. But you guys know me, I was on here saying, I'm buying this dip. I think this was a ridiculous drop. I think the valuation just went way too cheap. And obviously we're having the bounce up in Card Factory today. Bit of a move I didn't see coming from them guys. They are going to expand into the wholesale gifts market and celebration market in the US as well through a wholesaler. They seem to have paid a pretty decent price from it from what I can see here. They also gave some notes on the trading update, and they said that I think I posted on the Discord and Patreon, I said keep an eye out for a Card Factory update this week, and also keep an eye out for a Warpaint update this week, and we got both of them, so give myself 2 bonus marks there. We got the update as well from Card Factory saying that the second half has continued to be in line with expectations, and expectations to hit the full year guide are unchanged, and they're going to give us an update on 14th of January. So it looks like everything's in line. Obviously, they said that it is the start of the Christmas period, so things can change. But once again, saying that the full year guidance is there to be hit. They said they're going to do it once again. And what we look at the big drop that we had when the last update came out, the interim results drops came out. You look at this stock now and going, I still don't know why the stock fell 43% when we knew there was going to be a drop in the profitability. They didn't change the full year guide, and now we're very close to the year end. And sure, there might be a little bit of volatility in that Christmas period, but they're still expecting the full year guide. And I understand there was a big drop in profitability, but I could understand the market selling this off by like 10, 15%, but I don't understand why they sold it off by 15%. It just didn't make sense, because we kind of had the news that it was going to be a slower H1 as some of these cost-cutting measures did kind of come in, and now that obviously they're still very confident they're going to hit it at the end of the year, but yet the market still sold it off. It was absolutely stupid to see. And I was looking at the notes on Stockopedia. You can join Stockopedia with a link in the description, and you can get 25% off if you use the code. But I was looking at the notes on Stockopedia from some of the people that write on it, and somebody was talking about Card Factory. Someone called Megan. I don't know who Megan is. I don't know if she's a new writer for them. I've never seen her mentioned before. But at the moment, she said that she's amber on Card Factory, and she said she's ambitious because of the first half year results, and they're going to need an increase. Well, this is what management have been telling this to us all the time. And I tell you something, if you think you're going to wait for the full year results and the clarity on 14th of January, and they hit the full year results and then you turn green, it's too late. You've missed it. These are the opportunities that you've got to really take as an investor, because right now, if I go back up to where Card Factory is on Stockopedia, you can see here that if they hit the 2025 forecast, this is at 6 times earnings. If they hit the full year guidance, it'll be too late. They've basically come out and said, we're letting you know that we're going to be a little bit short on profit in the first half. We'll make it in the second half, and that's what's doing. And as well as that, even very close to the year end now, we get an update saying, yeah, we're still in line. I generally think if Card Factory hit their full year results, this stock is going to go up 30-40%, and it'd be too late to buy then, and you would have missed the opportunity. Sometimes that is investing. You got to be a little bit more. You can't react to this when you can't react to the stock price. And I saw someone actually mention this on the comments of that article as well, saying that this whole situation around Card Factory is absolutely ridiculous, and I totally agree with it as well. So yeah, good to see Card Factory having a bit of a bounce up now. It's very well deserved. Also worth pointing out that the CFO as well today went and bought a chunk of shares. The CFO, as you can see here, bought around about 21,000 worth of shares, which values around about 20k worth of shares. If you're the CFO, you're near the year end, you're there, you know what numbers they're doing. If you're buying shares at these sort of levels, to me that screams out that they are very close to hitting the numbers they expect to do. And the CFO buying this gave me a lot more confidence as well. So hey, I think that that amber should have been a green on Card Factory. Going to Warpaint. So Warpaint, a little bit it did okay today, not too much there. And news came out that they have bought a brand, I think you say Architects Group, a rival other kind of beauty products for around about 13 million, which was a 100% premium to the closing value on Wednesday. Looks like a good acquisition. I'm sure that they will be able to expand this more into the retailers that currently Warpaint have as well. I was looking at Warpaint and I was thinking that this could be a good expansion for them. I'm a little bit confused on how they raise the capital. I don't know why Warpaint are looking to raise capital when they could just pay it out with a cash point of view, but it is what it is. They obviously did a bit of a share offering. They prefer not to take a debt on, which is fine, I guess. But I don't know if there would have just been more sensible to pay out with the cash, but hey, it is what it is. Same again, I was looking at Stockopedia and they gave this amber and green on Warpaint, and basically they basically gave it amber and green on Warpaint because they did not upgrade the guidance. And I was like, you can't just give it amber because it didn't upgrade the guidance. You can't punish a stock because it didn't upgrade its guidance. It said its numbers are going to do. The numbers they're going to do are obviously exceptional. I don't know if I can go back here onto the numbers that they're actually supposed to do. So yeah, we're expecting 89 million up to 106 million. We're expecting net profit to go to 13.9 million up to 18 million. And the stock at the moment will go down to a 22 times forward earnings. That's a good value for the the numbers that they're currently doing. I didn't really get that comment either as well. So yeah, I'm happy with the acquisition. I think it's a good acquisition, and hopefully Warpaint can expand it. And obviously they're still going through their peak Christmas period as well. So maybe we do get an upgrade to the back end of the year. That'll be obviously really nice because the numbers do look like they can beat them. However, even if they don't beat them, I think the numbers look very good as well for Warpaint as well. Not sure if you saw this actually. There was an article posted out that police are currently investigating that the leadership team of Boohoo have had people stalking them. I don't know if this is a Mike Ashley kind of pressure tactic with what's kind of going on there at the moment, or I don't know if it's one of you guys, a little bit of a peed off shareholder. That could also be the case as well. I mean, I was thinking who could potentially be stalking them, and I think, if you looked at some of the pay packets that they have been doing and been taking, and also you look at the way that they have dealt with the shareholders in the last kind of few years, I think there's a list of people that might be queuing up for them, but it wasn't me before any of you start throwing those accusations out in the comment section. Going on to another kind of company in this kind of space, Shein, IPO could potentially be happening. I'm absolutely shocked. I'm surprised this has been allowed to happen. I look at the issues that Boohoo had with like labour concerns and other things that happen in this country, and then all of a sudden we look at an IPO that could potentially hit the company, and we're all like doing a blind eye, like, oh yeah, whatever, come list on our market, it's absolutely fine. Made me think, what is going on? To be honest with you, that is being allowed to happen, but hey, whatever. PayPal had a pretty good day yesterday. Stock jumped up quite a bit. They did a UBS conference, and basically they talked very positively about some of the things that they're bringing into PayPal's business. I still look at the last earnings, and I still look at the last earnings thinking, yeah, it's okay talking a good game at the moment, but you know, you look at the EPS guide for the next quarter, $1.48 down to $1.11. Next year, at the moment, $1.08 to $1.12. I look at the revenue growth, next quarter, 3% revenue growth, next quarter, 4% revenue growth. You know, I like PayPal, I've been buying PayPal, I'm up on PayPal, but you know, I do look at it now, and you know, people still say about, oh, this run's only going to continue. It's up 45% year to date. The run's only going to continue on PayPal. I'll be honest with you guys. I look at these numbers, and these numbers are way behind where I thought they would be. You know, a lot of people are jumping on the PayPal train, and you know, I was on the PayPal train at $60, and now it's you know, up to $90, and I'm looking at the numbers that are not really moving in the direction that I hoped for. I'm a little bit more like, I'm not sure on PayPal as much now, and so I thought I'll let you know that one anyway. JD Sports. So JD Sports not really done anything, but a little bit JD Sports related. Foot Locker came out with their earnings on Wednesday, and they were terrible. Revenue was down 1.5%. They downgraded the guidance, and also they went from a net income of 28 million to a net loss of 33 million in the quarter. And I looked at JD Sports. That had the big drop off the profit warning. Where was the drop off the profit warning? Well, I mean, it's had a pretty awful year, but you know, since September time, you know, the stock's down 33%. I guess on that, I said profit warning, you know, it's down 20%. It wasn't even a profit warning. They basically came out and said, oh yeah, we're going to be a little bit lower to the end of the guidance because of a weak October time. And it was like, oh, yeah, fair enough. You know, it's not the news you want to hear, but the reaction to that stock drop was absolutely insane. And now you look at the numbers that Foot Locker have come out with, and the numbers that JD Sports are doing. The numbers that JD Sports are doing look absolutely amazing compared to Foot Locker's numbers. You look at JD Sports numbers and the growth they're doing, the profit ramp up they're doing, yet you look at someone very similar like Foot Locker, and they're struggling massive. And yet, I think Foot Locker, I'm trying to find, what was the reaction on the share price? It did drop off their earnings slightly, and since then it like recovered most of the dip. Like, it's only down like 3-4% on after they reported these awful earnings. Yet JD Sports had not great earnings, but they were still pretty decent when you consider it's like 9 times forward earnings, and it had like a 20% drop. It just does not make sense. And the more I look at JD Sports, I'm like, how is it these sort of levels? And obviously, you know, with JD Sports as well, you got a pretty decent balance sheet. What was really interesting in the Foot Locker earnings is they basically came out and like they pinpointed Nike. They said like Nike is one of the big issues with us, and I was thinking like, you know, that's not good news for Nike. If Foot Locker coming and saying out your week, and you know, they might be passing the blame on a little bit. Like, everyone knows Nike has really weak earnings at the moment, so let's just blame them. It might be passing the buck a little bit, but I thought to pinpoint them is quite a big thing. That of like, I'd be concerned if they have done that, because we know they're bad, but the fact that they're coming out saying they're even worse, probably not great for Nike. And once again, I think that a lot of people on the YouTube scene talk about buying Nike, and I always look and think, you know, there's competition coming for them. You know, you look at On Holdings, I think there's serious competition coming for them. And I think when you're willing to pay 22 times earnings, or I think it's even higher on a forward PE, if you're willing to pay this sort of PE for a company, but yet you look at the numbers they're currently doing, you know, and the volatility in like the industry, you know, the luxury market is not very loyal. The customers in the luxury market aren't loyal. I know this from the likes of Boohoo, for example. And everyone thinks Nike's going to come out on top. And I would think they would, but I wouldn't be willing to bet 22 times earnings for it. I won't be paying 22 times earnings for it, I'll tell you that. And you look at the numbers right now, I mean, 7%, 7.5% negative year growth this year. I mean, next year we're expecting 4% growth. I'm sorry, but I think you can't be paying 22 times earnings for a company growing at 4%. I don't think that's good enough. And in fact, I think on a forward PE, it's even higher than that. And I compare that to someone like a Lululemon. I've said on the YouTube before, guys, I think Lululemon was a much better buy than Nike. And that's the one that I bought. I thought the value was cheaper than Nike. You know, you were getting Lululemon, at 18 times forward earnings compared to Nike's, you know, 22 times earnings, or even like 26 forward times earnings. It was a lot cheaper. And as well as that, with Lululemon, you had a lot more growth. You know, with Lululemon, you're still going to have 8% growth this year. You're going to have decent ramp up on the EPS. Next year, you're expecting 7% year-over-year growth. And now we're expecting the EPS once again to go up a good amount as well, outgrowing the revenue. And I said before, Lululemon, in my opinion, is the better stock in this industry. You got a lot better valuation, and as well as that, you got a lot better growth than Nike. And when you're buying into this luxury market, there's no loyalty. And I'd be picking the one that has the better valuation and the better growth at the moment, and that's what I did. And obviously, since the time that I have bought Lululemon, I'm up over 40% on my position now. I am funny enough, it actually got to earnings tonight, so it'll move again tonight. And I got to say, I'm now looking at Lululemon and I think 26 times earnings now is a lot fairer for this business. And like I said, there's no loyalty in this sort of space. Do I kind of take my profit and run through Lululemon? But yeah, we kind of went through like 4 different stocks there, talking about how JD Sports is at stupid value, especially when you compare it to like Foot Locker, and Foot Locker's 15 times forward earnings. You can get JD Sports for half the earnings, and yet they're not having to downgrade it. Well, I say they're not downgrading the guidance. They're at the lower end of the original guidance. They're growing more. They're making good amounts of profitability, not in losses like Foot Locker. And then obviously Nike, concerns around Nike. That's why I'm not personally buying Nike. And Lululemon, I always said, Lululemon is a lot better buy than Nike stock, and that's what's actually performing out there at the moment. Legal & General, pretty good rally from Legal & General. You can see here the last 7 days that's up 7%, which is a pretty big move for them guys. I think realistically, there are a few buyers coming in after the budget starting to come in now. I think the last kind of couple of days we've seen a few buyers coming after the budget, and people kind of going, okay, these stocks are just a little bit too cheap now. I am going to take the risk with them. It did rise up on a capital return plan. They said they're going to do a little bit more of a share buyback for investors. I think realistically, yeah, it was good news. I think realistically there was just a few bottom dippers coming in and going, actually, you know what, we should buy Legal & General because the value is a little bit too cheap here anyway. So yeah, busy few days, to be fair, in the stock market. It's been a good few days. When you look at the moves in Card Factory, Watches Switzerland, Lululemon, that's for example there. It's been a good few days in the market for me as well. And obviously Hims and Hers, we've not even talked about that one today. So yeah, we've had a lot to cover, and there's been a lot of stories as well. So what was a very quiet week on Monday and Tuesday, Wednesday and Thursday is just absolutely exploded into life. And I thought I was going to have to make another video saying about how overvalued Palantir is at 368 times earnings, but hey, I can maybe leave that one for Friday or Saturday. I think we're a bit too busy at the moment with a lot of other news stories. So yeah, let me know what you think in the comment section. Obviously, if you're any shareholders of these ones, let me know in the comment section. Watches Switzerland, any of you guys bought that dip? What's your plans at the moment? Is it time to release some profit? Card Factory, any of you guys bought that dip on Card Factory? Yeah, hope you enjoyed it, guys, and I'll see you all in a bit.